Welcome to this video on how to make money fast trading stocks, Forex, futures, whatever market. This is one of the patterns that will crank your P&L up as fast as anything I've ever seen. That's a certain setup, and we all know that when we get into a trade, we like to make money, we like to make money fast. Nothing as frustrating as getting into a position and then the market just stops moving and just kind of hangs. You ever had that happen? Doesn't stop you out, doesn't go up and make any more money. Just seems like as soon as you get in, well, the market moves up enough to fill your order and then it just kind of hangs there for a while. Gets very frustrating. Sometimes it can go on for so long that you start to wonder if you should even stay in the position. Well, the pattern I'm going to teach you today is very different than that. It's a very specific price pattern based on pure price action. And so here it is. Here's the basic explanation, and then we'll show you a couple of examples. So the first way to look at this is the pattern of price. And that pattern is a very, not quite vertical, but a very steep slope. Some people call these parabolic moves. So if you look at from here to here, okay, if we drew a rectangle there, it actually is that low, and we cut that in half, it's not going to be a square. In other words, it's going to be more than, let's see, I just approximately roughly show that there. Let's say that was a perfect square. Okay, and that would divide the square in half. So we want to see an angle steeper than that, in other words. So that's the very first thing you need, is a very, very steep, almost vertical move, as much as the market can do it. Obviously, when each bar forms, it moves to the right. So then what we do, so this, by the way, first of all, the pattern here is one of emotion. That's what's behind this. I always like to explain why things work. So what's happening behind the scenes is there's very emotional selling, and that's why the market moves so far. We're just going to hear right now. So it moves a long distance in price. Let me get my, there we go. Long distance in price, but not very far in time. Okay, that's another way of looking at the same thing. So it moves in Gann terms. This would be a very steep angle with a Gann fan, and it covers a lot of price in a very short period of time. And that is one of the hallmarks of emotional trading. Now, what caused it doesn't really matter. Could be a news report, could be earnings release, could be rumor, could be gossip. It might not even be real, right? It might be fake news. But it's an emotional response, in other words. And then what we're looking for is a little bit of consolidation. Now, the consolidation can take a little different form. Here we just get, and this is what you want. You want something like this. And that's generally going to happen at support. So we've got the support over here, and that's generally what's going to cause the consolidation. What you do not want, what does not fulfill this particular pattern, it can work for other things, but not for this pattern, is for the market to move down. Let me start anew here. Create a clean slate. You don't want it to move down and then move up and then go down. Now, that can be another tradable pattern. I'm not saying that doesn't work, but that's not this kind of pattern we're talking about today. We're talking about how to find a pattern that makes money fast after you get in. So if you look for this pattern here, then you'll see you get a little consolidation, and then you get another very steep angle move. And that's the point, is between or before and after the consolidation, we're looking for a very, very steep slope of move. And that's what makes you money fast in a short period of time. I mean, right here, it's only, what, 3-4 bars. And that's it. That's the end of that leg. So not a lot of money on that one as far as reward to risk ratio. Actually, reward to risk ratio is not too bad, but you know, it's a quick little trade. Now, sometimes you'll catch these. You'll never catch the first leg on these. That's the thing with this type of pattern, these very steep slope patterns. You're going to have to wait for that first leg to be put in, and then you're looking for the second or the third leg of it. So let's show another example. So here's another good one. All right, so we get a bit of a move down here. Okay, now this time we do get the retrace. Then we get a very steep angle of price movement, and then it just moves sideways. That's what we're looking for. That's what we're looking for. And then this is where we would get in, and ride that leg. It's usually you're just getting one leg. It's kind of a scalp trade, if you will. But again, within what, 1, 2, 3, 4, 5 bars, you're done. So quick trade, but your P&L goes up fast. Within 5 bars, you're in, you're out, and it is a pretty good reward to risk ratio. Why? Because we're trading inside this narrow range pattern here, you see, and then that's your reward. So quick trades, but fast trades, P&L scrolls up fast, and that's kind of fun to see, right? It's cool. Now, what's the dynamic between not wanting it to retrace? Why do I say we just want this to consolidate? Because we want that dominant buying pressure to be retained in the price action. So in other words, if the price went down and then went up a bit, well, that could mean that there's some actual buying coming in. We don't want buying. We want this thing to have almost pure bearish action that's just pausing for a moment with basically some profit taking. And again, where's that profit taking going to take place? At a previous low. That's the support. Look for that. That's what you want to see. You want to see this action at a previous low, at a support level, and then wait for the breakout back to the downside. As soon as it breaks out, you're in, and bada boom, bada bing, bada bing, bada boom, whichever way it is. Then we make the money, honey, and we cash out right away. Let's show another example. Now, here's an example I want to show you again in the context of keeping it real. Let's keep it real, my friends. And what that means is you don't always get this setup every time you get a very steep angle. So, for example, here we go, bam, that is definitely a very, very steep angle, right? But we never get actually a setup in here, and then it ends and it goes up. And by the way, where does it go vertical? It goes vertical right after that low. So notice again, previous support is where these things go. But this would not fit this parameter of this particular trade setup simply because it had not been parabolic or a high vertical trade coming into that. And then we never really got a consolidation after it started. So that's okay. That's cool. I just show you this because I like to show you not just examples of when everything works, when it's perfect. Everybody does that textbook example. No, I like to show you those, of course. But then I also want to show you the reality, because when you get in there trading, you're going to say, well, dang, I didn't get a pattern. How come? Because they don't all give you these trade patterns. When they do, great. When they don't, fine. You go into the next trade. That's realistic trading. And don't have buyer's remorse or shorter's remorse in this case. Just say, okay, they don't always set up that way. I'll wait for the next one that does. Now, here's another distinction that I always look for, and that is wave count. Now, this is a different kind of wave count. So here is the wave count as I would see it here. So we got our move down. That's 1. Okay, a little hesitation. Notice not a big retrace, just kind of goes sideways, a little bit up, but all those bars are overlapping. Goes back down to where this support here consolidates. So wave 1, 2, 3, 4. It's not even 4, it's that way. 4, 5, 6, 7. So this puts in 7 waves, if you will. And I will say, because one of the questions that comes up is, well, when do we get out of these? Some of them only go 3 waves. 5 waves is definitely an extreme. If you get into one of these patterns, like let's say, for example, that you traded it here or even here, this is the one that I like the best because it's breaking support and it's really just moving completely sideways. So if I took it there and I was able to hold in until 7, I would definitely just get out at 7. I wouldn't even wait, because it's very unusual. We have now gone beyond the norm of the statistics of these kind of very steep sloped moves. So 5 is kind of average, 3 to 5, 7, no, just get out. You're good, celebrate, have a good time. All right, now we're looking at the Japanese yen futures. So again, just to, I think showing multiple examples helps. So again, a nice little steep angle there, but it's only 2 bars, right? We get our little consolidation there. That comes in at this high. That's not really the pattern then, but it's the beginning of the pattern. So it will serve for wave counting purposes. Now, when we get to this, see, now that's a more significant resistance than that because it's higher and it stands out more. And what happens as soon as we get into that zone, sure enough, then the market consolidates. So that would be the entry for the technique that I'm teaching today. We want to break out of that resistance, have a sideways movement here, and then it goes vertical again. Boom. Now, if we're counting our waves, then it's 1, 2, 3, 4, 5, 6, 7. And here's another thing to look out for. If you do get to a seventh wave, it's quite normal for this wave right before 7, between 5 and 6, really it's, between 5 and 7, it's actually 6, for that one to be a little messy. I've noticed this over time. This wave 6 will often be kind of a messy price pattern, not as neat as these consolidations come before it. So the longer the market goes on, again, extending beyond the normal statistics of a steep angled move like this, the more the neatness starts to break down. All right, I'm going to end giving you my favorite pattern within the pattern of this. Would you like to know that? Alrighty, I shall show it to you, absolutely free. So what I like to see, and again, you can trade this many ways, and I'll tell you this one doesn't set up as much as other patterns, but this is still my favorite. And hey, isn't that the way? It seems like the stuff that works the best doesn't occur that often. Well, yeah, that's the nature of the game. But basically, it's real simple. So we get our steep angled move here. We're at resistance. By the way, we also got a gap close here, right? So that provides resistance as well. Now here's the pattern that I like the best. In fact, let me just expand this a little bit. It's when within this sideways move here, we get a bar like that, where it opens and closes near the high, and you've got this fairly long wick at the low end. Normally, it's not going to be real long because of the nature of this move, which is just basically going sideways. But that is a rejection of value of these lower prices. That's literally what that means, which is good. If we're going to be bullish, if we want to buy, then, and we're going to get in above, the high of that resistance there, then, yeah, we want the market to reject lower prices. In other words, there's a few people who are trying to short this thing, and there's not enough people to take the other side of the trade, so it keeps going up, and that's what we want. So this kind of bar right here, if you get that in addition to the parabolic move up, and you get that in the consolidation, then I consider that an even higher probability trade for this very steep sloped price action type trade. So if you like this video, if you got value from it, I encourage you to share it with others so that they can get value from it as well. And by the way, the more you share it, the more that, I'm encouraged to create more free tutorials for you. Give it a thumbs up. Also, leave your comments. Love your comments. As you probably noticed, I respond to comments quite often and very frequently. I make that part of my regular schedule. And finally, I am giving away one of my favorite trade strategies. That is, it's literally one of my favorites. I still trade this to this day. Every time it sets up, I trade the rubber band trade, as it's called. And I'm willing to give you that whole trade with money management rules, where to get in, where to get out, where to place your stops, all that detail absolutely free. And it's in a little 5-day video course that, again, no charge. It's free to my YouTube subscribers. So just go ahead or even if you're not a subscriber, heck, if you're watching this video, it's available to you. So go ahead and click on the link in the top right-hand corner of this video, or there's also a link in the description below on YouTube, and I'll get that over to you as soon as I see your message.